A very good morning to all of you. Type yes in the chat box if you can see my screen and hear my voice. Let's do a quick audio video check. If things are working fine, we'll continue with the session. So type in a yes if you can see my screen. It would say YouTube live, and if you can hear me, please confirm. All right, perfect. Thank you so much for the confirmation. Let's start with today's session. Now, before we move ahead, let me add, make sure in this stream option, you have a settings which says what resolution you want this stream to be. You can select it as 720p so that the text is much crisp for you. So a very good morning to all of you. Welcome to another YouTube live session. Myself, Sujit Kakkar, and today is Friday, 23rd of November, 2018. Now, today's session, generally, I don't do a session on Friday. It's just that the markets are off today. So I thought, why not to do a session on Friday? And it's a big surprise for all of you. Just give me a second. Let me bring this up. So if you have still not gone through the session which I did the last Sunday, you can go through it where I talked about that we have launched a new indicator, which is called as the demand and supply zone indicator. Now, before this indicator, yes, we were having the boring candle and the explosive move indicator, which would mark the boring candles for you and the explosive candles for you. And then you will have to manually search for where are the demand areas on the chart, where are the supply areas on the chart. So we took it one step ahead. So now what happens is this indicator by default marks the demand areas and supply areas for you. So like here you can see that if I'm on this chart, currently close by, it's not identifying any zones because based on the criteria which we have set for the indicator, no zones are available. But yes, it did show us a supply zone some time back, and this is where a supply zone got created. Prices came to that supply, gave a small little bounce, then the supply got violated. Similarly, it had a demand area. If I look in the past, it will also be showing me the other supply areas which were formed, the other demand areas which were formed. So it does that automatically. So now instead of you hunting for where are the demand areas and where are the supply areas on the chart, you just have to see where those arrows are, right? So wherever those arrows are, that text is written demand areas and supply areas, you will be able to identify your demands on supply zones. Now, one thing which I'll add here is that we are not excluding zones which have been violated. The reason for that is because I know a lot of people who believe in flip zones and they would like to use some violated zones as a flip zone. So that is the reason we are not removing them. But based on your trade plan, if you use flip zones, yes, you can check them out. If you don't use flip zones, then always look for fresh areas of demand and supplies, which can be your trading opportunities. Now, coming back to this, yes, we know that demand and supply can be used by itself if you know what the complete methodology is all about. Because it is not just based on one time frame. As an example, just because we have a demand zone does not mean we will be buying here. Just because we have a supply zone does not mean we'll be going short here. It has to be looked at with the overall perspective where we have multiple time frame analysis. We look at the higher time frame, we look at the intermediate time frame, and then we decide whether a zone is tradable for us or not, right? But I know a lot of people who might not be using demand and supply or might not know the complete methodology, which is demand and supply. So if you want to use this tool in conjunction with whatever your methodology might be, right? Maybe you're using Fibonacci levels. So now what you want is when my prices come back to my Fibonacci levels, I should also be having a supply zone there. So it added, you can use it as a confluence, which adds more probability to whatever methodology you might be using. Now, first thing, what is demand? What is supply? Now, these are the potential areas on the chart where we believe there can be unfilled orders, right? So demand means there can be unfilled buy orders. Supply means there can be unfilled sell orders. So what are we expecting? Our expectation is that if this is where those unfilled sell orders can be, when the prices will come back to this area, those sell orders will start getting executed and the price should move down, right? So whatever your methodology might be, if you want to use it as a confluence just to see whether it is working for you, it is not working for you, you can do that. And what we have done is, when I launched it on Sunday, I got a request from a lot of people that they would like to try it first. So what we have done is we started it few days back, but yes, you still have access for you will still get access to this till 30th of November, which is end of this month. Now the question is how to get access to it and what all access you will be getting. So let me bring that up for you first. So what you need to do is this is the URL. Let me give you the URL. It's surjitkakkar.com/tryout TRYOUT. The link is also provided in the video description, so you can click from there. So all you need to do is now it doesn't matter whether you have taken any course from us, you're registered on our website, you're not registered on our website, doesn't make any difference, right? This is open to anyone and everyone. So all you need to do is just go to this page, and after going to this page, there are few things which are provided. Make sure you read each and everything. One, you need to have Telegram app installed on your phone. Two, you also need a TradingView account, right? If you don't have an account, you can click here, open an account for yourself. So make sure you have both these things done before you start moving forward. If you don't know what our alert service is, you can also watch this video. This will help you understand what our alert service is all about. And like I said, I did a session last Sunday, which was on what this tool is all about. If you want to go through that video, you can also watch that video from this link. Once you're done with that, you are familiar with what are alerts and what this tool is all about. You will fill your name. You will be providing your phone number, your email address, your Telegram username. If you don't know how to find your Telegram username, click here. There's a small little video which will help you understand how to identify your Telegram username. And similarly, if you don't know what your TradingView username is, you can click here. It will tell you how to find your Telegram username. So make sure you're filling the form correctly, because if you make any mistake, the tool is not going to get activated for you. Just give me a second, please. Right. So now what all gets activated for you? When you fill this form, we are basically giving you a tryout period, not just for the, let's bring that back. So not just for the indicator, but you will also be getting access to our alerts channel, right? Yes, you will be joining the demo alert channel, but what we have done is, as of now, the demo alert channel is working as good as a paid channel. So you can also check that. So what is going to happen is you will get live alerts as soon as a demand zone or a supply zone gets formed on whatever market you have selected. We have three options. We have for NSE, we have for MCX, we also have for the international Forex. So you will get live alerts as soon as a zone is formed. You will get to know that on which script we have a demand zone, or which script we have a supply zone, on which time frame do we have that demand zone or supply zone, which makes your life easy, that you don't have to watch now a number of scripts. Give me a second again. You don't have to watch a number of scripts. The alert system tells you that this is the script where we have a demand area, or this is the script where we have the supply area. And then you can go to that script, you can apply this indicator, you can check where that demand zone or supply zone is. And now if you're a purely demand and supply trader, yes, you can apply your trade plan. You can check if it gets qualified or not. If it gets qualified, go ahead and take your trades. If it doesn't get qualified, you can wait for the next alert. If you're not a demand and supply trader, you use something else, maybe some moving averages, maybe Fibonacci's, maybe Bollinger Bands, maybe some indicators, oscillators, could be anything. You can again use demand and supply zones as a confluence, that, okay, what I want to do is I want to try it out with the demand areas and supply areas, that in case your methodology is giving you a buy signal, it should also be in a demand zone. My methodology is, if it is giving me a sell signal, it should also be a supply zone, right? So if you get those signals, you can try it out and see whether it improves your outcome of the trade, or if it is helping you, not helping you, right? So you have that a tryout period till 30th of November. Surjit, can you show one example how notifications they look like? Absolutely, right? So just give me a second. I'll show you how those notifications would look like. So these notifications you will be getting through Telegram. We have different channels on Telegram. And when you're filling this form, you will get the option to join all the channels if you wish to. What I'll do is I'll bring up the Forex channel, because I just got an alert on Forex channel just a few minutes back. So let me show you that. So this is how you get the alerts. And just give me a second. In fact, give me a second. Let's go to Forex. Right. So can you see? Just got an alert at about 10 o'clock. We are at 10:09. So we got an alert about 9 minutes ago that on USD JPY, we have a supply zone, which is a drop based drop. The supply zone is on the 15 minutes chart. Approximately, it starts at 112.93 and ends at 112.94. So let's bring this script, which is USD JPY, right? And let me change this to Forex, and let's say all exchanges, and there we have it. Right, so let's wait for it to show up. Okay, just give me a second. Seems like it got stuck. Right, so it is stuck. I don't know why. Okay, so now it started working. Right, so we got an alert for supply. Now on this, we still can't see the supply. The reason is because the data feed, it can be different from different exchanges. So let me open it using some other data feed. So this is USD JPY. That was the alert, right? So let's see if we have the zone on this one, because the data feed can vary depending upon from where you're getting that data feed, right? So let's look at the next one. So this is working a little slow today. I don't know why. Probably refreshing might help. Let's bring up this one. Right, so can you see we also had this demand area which was formed some time back, and our indicator told us that this is where you have a demand area. Again, beautifully, prices came to that demand and you got a really nice reaction from this. So I'm still trying to find which data feed would match. Let's see this one. Right, because the data feed which gives the alerts for the demand and supply zones, and the data feed which we are having here can vary at times a little bit. So what I'll do is probably I'll go to some other script and maybe show you an example. Just give me a second. Let's go back. So let's take this one. So can you see we just now got another alert at 10:10. So can you see we had an alert at 10 o'clock, and now we just had an alert on 10:10. It's on a 5 minutes chart on Aussie USD. So let's check Aussie USD. And this is an alert on the 5 minutes chart. So let's check that. So let's go to 5 minutes. All right, so somehow it's working very slow today. So probably the alert would be for the zone here, this drop based drop. So if you look at the numbers, we can try to get an approximate value. So this is 7251. So you will see wick to wick, this is going to be 7251. So can you see 7251 to 7254, right? So that is going to be your 7254. Can you see 7254? So that's the alert that we have a drop based drop. And can you see this is how it works? It gives you the alerts immediately. Now, one thing which can be done is, because this indicator, this has a setting that how strong you want your leg outs to be. So as of now, the settings is set to 1.5. So the smaller the number, even if the move is a little weak, it will still identify for you. Now, as an example, you can see now it's just showing me few more zones. If I push it to 1.5, the number of zones will become few. You will see as soon as I make it 1.5, some of these zones are gone. If I want some of the strongest zones, I will give it a score of 2, and now it will only identify some of the strongest zones for me. So you can backtest and see what is working for you. But that is how this alert service is. It gives you the alerts as soon as these zones they get formed. Like in this example, we immediately got an alert for this supply area as soon as it was formed. Right now, the reason this is not showing it as a zone for us is because even though this leg out is strong, the number of candles is in basing is too many, right? Because you can see you have 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5 candles. So if the number of candles would have been 3 or less than 3, yes, this would have also marked it as a supply zone for us. So these are the so this is one of the criteria for it to mark a zone for you, that the number of candles in the basing has to be less than 4, which means it has to be 3 or less than 3. So that is what happens with the alert service. Alert service gives you the alerts as soon as a zone gets created, on which time frame that zone is, where is that zone starting from, where is that zone ending. Wick to wick, it gives you the number. what is the time frames. You would also be able to experience our alert service, and you will be getting these real-time alerts till 30th of November. Plus, you would also be able to use it. All you need to do is just fill up that form. Now, it may take up to 24 hours for us to activate it for you. We are trying to do it as soon as possible. But yes, to the max should not take more than 24 hours. So you can fill up that form and you can experience our alert service and also this indicator for free till 30th of November. So that is something you can definitely do. Sujit, can we add zone violation also? Like the zone has formed that it has violated the zone. So Steve, but the fact is, once you draw the zone, you will definitely get to know whether the zone has been violated or not, right? What we could have done is we could have avoided the indicator identifying the zones which have already been violated. But the reason I didn't do it was specifically because I know a lot of people, they use something which is called as a flip zone. So what do we mean by a flip zone? A zone which has been violated. Let's imagine if it was working as demand first. Some people believe that it should now work as supply. So for those people who want to use it, at least it is there, right? But if you don't want to use it, don't use the violated zones. Anyhow, we would always avoid violated zones, but just so that people who want that option, at least they have that option, right? So that is the reason I didn't remove the zones. Like example, this supply is violated, but it is still telling you that you had a supply area just in case somebody wanted to use it as a flip zone and was expecting that because the supply has been violated, now the supply should act like demand, which is where you can see it also gave few bounces. So just for that reason, I'm keeping it there. Otherwise, for my personal trades, if you ask me, I don't use flip zones, right? So it's just that I thought at least you'll have all the options and it will cater to everyone. And that's how it is. Is really demand and supply work well in trending stocks or markets? Personally, I feel that in range bound markets, there is a lot of probability to hit your stop loss. So, world's background music, right? So, the fact is, whether it is trending market or it is not a trending market, the probability of getting stopped out is exactly the same, right? It's just that if you're good with your analysis, yes, you might get stopped out a little less. If you're still learning it, you might get stopped out a little more frequent. But again, if you talk about your hit rate can be close to around, let's say, 60%. Irrespective whether you're trading with the trends or you're trading against the trends, don't expect a hit rate to be 80%, 90%, 95%. And again, I have said this before, probably I would also have done a session on this. If you go through, yes, I guess I did a session. The name of the session was The Right Way to Be Wrong, right? Because the problem is that everyone runs behind the hit rate, right? They want to have all trades as winning trades. That is what everyone is searching for. But you need to understand that the correct way to trade is not by running behind the hit rate. The correct way to be profitable is by running behind your reward to risk ratios. Now, as an example, if I take 10 trades, I get 9 winners and I get one losing trade, right? Or if I take 10 trades and I get, let's assume, 4 winning trades and 6 losing trades, right? 6 losing trades. So, what would you be more interested in? Would you be more interested in this one, or would you be more interested in this two? Would you like to have more winners and less losers, or you're happy with less winners and more losers? What would be majority of you would be more happy having as your outcome, the outcome one or outcome two, right? So let me know that in the chat box. Let's see what answers do I get, right? So what would be what you would be more interested in? 9 winners, one loser, or 4 losing trades? Maybe sorry, 4 winning trades, 6 losing trades. More number of losses, less number of losses. What are you more interested in? So give me your answers in the chat box. Let's see. I know it gets a little bit laggy. So one, all right. How about others? So give me your numbers. I mean, give me your choice, one or two. Right. So I'm still waiting. Perfect. So see, can you see it's an obvious choice that everyone would go for one. Why? Because we want more number of winners. But let me now put it this way: what if you were risking 10,000? What if, just as an example, you were risking 10,000 rupees just to make 1,000 rupees, right? If you were doing something like this, yes, you can be right 9 times, which means you made 9,000. But when you were wrong one time, you lost all the profits. So can you see now this reward to risk ratio? I mean, this hit rate is nothing good to you. But let's imagine if you are risking 1 rupee, one every time to make two, then you would be happy with this, because whenever you were right, you made eight, right? Because you are making twice your risk. So because we are saying your reward to risk ratio is 2:1, which means for the four winning trades, you made eight. Six winning trades, you lost six. You still made two, right? So can you see at the end of the day, it's not the hit rate which keeps you profitable. It's your reward to risk ratio which keeps you profitable. You can be wrong more number of times, but if you have big winners, you can be a profitable trader. But if you are losing more money versus when you're making money, you can have a hit rate which is 90%. Still, you can be a net losing trader, right? So that is one thing which you need to understand, that at the end of the day, don't run behind the hit rates. The only way to have a hit rate which is 90%, 95%, maybe 85% is by risking a lot to make less money. But when you're working on very good reward to risk ratios, probably you can maintain somewhere between 50 and 60%. There is a big confusion. Okay, decided for our targets. Suppose we buy from demand, then there is a lot of supply in the way before reaching to the strong supply, and many times it returns. So again, I'll just quickly add here. When it comes to your targets are always the opposing fresh supply, right? You don't have to look for quality. As long as it is fresh, it is your target. If you're always looking for quality, trust me, you're getting greedy, right? Because if you have supply in between, even if it is ugly looking, prices can always turn back. So you have to make sure wherever is the nearest fresh supply, that is giving you the kind of target you're looking for. So, as per your experience, what is the best combination with demand and supply, Fibonacci? So, as per my experience, nothing works with demand and supply as a confluence. If you talk about me, I don't use any indicator, any oscillator to correlate with the demand and supply, because you will realize over a period of time that when it comes to demand and supply, all the indicators are lagging. So, by the time you're waiting for your indicators to show you some buy signals, sell signals, what is going to happen is you've already increased your risk. But yes, the two which you are talking about, Fibonacci and moving average, definitely a big no-no. It is going to be lagging. But Fibonacci is still something where you're waiting for retracement and waiting for prices to come to a level. So if you talk about these two, I'll still say probably you can use Fibonacci, right? But I personally, I don't use it. I've never used it. So you will have to do a sample size and see what works best for you. But what works best for me is not to have an indicator on the chart. Without any indicators, any oscillators, I just use these demand areas and supply areas to plan my trade. On chart, demand zone is there, but the next candle must be high to the previous candle. Then it's real demand. Is it true? So again, don't worry about how it should be, as long as the indicator is identifying a demand area and a supply area. For me, it is a demand and a supply zone for us. So what I'll do is we'll not get into how to identify demand areas. We'll not get into how to identify supply areas. So this session was specifically for you people to know that if you want to try this tool and if you want to try our alerts till 30th of November, I just gave you the link. It is also available in the description box. So you can click on it, you can register for it, and you can try it for a week. And yes, if it works for you, you get good results, then you can probably move to the next step. So I just wanted to share this news so that you people at least can try it for about a week. In fact, you have now an extended weekend. The markets are off for the next 3 days. Even if you want to do some back testing, you will be able to do it. If you want to plan some trades for Monday, you have ample time to do it. Now, this will work on all time frames, irrespective what time frame I go to. It will identify demand areas and supply areas for me. So I'll just show you as an example. Can you see no matter what time frame I go to, it is identifying my supply zones, it is identifying my demand zones. It will work on all the scripts which are available on TradingView, be that stocks, be that Forex, be that the Indian markets, be that the international markets, be that commodities, right? So you can try it out, and hopefully it might help you in getting better results versus what your results have been probably till now. And yes, I just wanted this session to be a very short session so that I can tell you, how you can access this. So make sure you fill this form again. This is the form which is, where is it? Just give me a second. Right. It's surjeetkakkar.com/try out. Fill this form. Don't make any mistakes, because if you're making some mistakes while filling this form, things will not get activated for you. Plus, we will not be responding any email and you're sending you a notification that you have provided something incorrectly, because we are getting a lot of requests. So it's not possible for us to follow up with each and every email. So what we are doing is, the people who are providing us the information absolutely correctly, for them it immediately gets, we are trying to activate it immediately, but like I said, it may take up to 24 hours. So you can try this, and you can also share this URL with your friends, because like I said, it's not just about demand and supply. Even if you're using some other strategy, you just want to try it out as a confluence with your strategy, you can also do that. So you can share it with your friends, family, your fellow traders, right? If you're on some trading groups or whatever it might be, you want to share it, most welcome to share it. We have no limitation. Anyone can join in and can try it till 30th of November. So again, thank you so much for joining in. uh, I'll be again doing some session very, very soon, probably the next Sunday. If you have any topic you want me to do a session on, you can put it in the comments, right? So we'll see. Whatever topics I'm getting, I'll pick some topic out of it, because I'm always running out of topics, which topic to do, because I've already done so many topics in the past. So you can give me suggestions for some topics, and if I like any of those topics, I'll do the next session on Sunday on that specific topic. So again, thank you so much for joining in. I will be seeing you next time. Until then, trade safe. Enjoy your weekend. Bye bye.